Okay, guys, so welcome back to this class. So, in continuation of how you can decide a particular stock you buy, having done your valuation of the stock to know at what point you are buying the stock, if you are buying rightly, so that you don't make a huge amount of mistake. As a beginner, or maybe as someone that want to up your game, to learn more about stock, how you can invest, how you can buy wisely, or probably you have been investing manually when you go to a stockbroker to meet them without knowing what they're actually doing. This is the best thing that you need to do for yourself, so that whatever a stockbroker is doing for you, an analyst is doing for you, or maybe you are following a mentor like me, you should be able to also do your own due diligence, do your own research, know exactly what the market is saying. So the next thing you do is to check the company's past performance. It's very, very important. Why you should know about the company past performance is to see the significant growth or the significant drop of their revenue, the progress they are making, if they are actually moving forward, or they are actually being stagnated, or they are moving backward. You should be able to know. So if you don't know all these ones, you may just be making huge mistake. You see, so you need to know all these things, because if you see a company that is actually progressing, attaching your investment, your money to that particular company will definitely bring you more profit. It's always very good, and this is what we call generational wealth, such that that this company in the next 10 years they're going to be placed in one of the top companies within the country or within the globe. Then you will be able to invest and transfer such wealth to your family or your children. Now come to performance, the past performance. It's always good you check all this. The past criteria checks, 2/6. So there are a lot of them that you can always check. The high quality earnings, they're actually doing well in their earnings. They're doing well in their earnings, but their current profit margin has actually dropped. It has actually dropped. But let me just go directly to it. So you have a 5 years analysis. You have a 5 years analysis from 2019 to 2023. 2024 is yet to be out. Every analysis or every company's annual report, they come at the end of the market year. Most of these companies, they end their year December, some September, some January, some November, October, as the case may be. This Compo Secure is actually still on until December, before the annual report will be out. So in 2019, there is significant growth in this particular company based on the revenue, and even the earnings. Their revenue was $155.4 million, yes, within the year, and the earnings actually was $51.9 million. So there's this profit margin of 33%, which is awesome. This is awesome. And the free cash flow was actually seated on $29.9 million. It was awesome. Why in 2020 there was also a high revenue. There was a high revenue, the earning also increased. Then the percentage of the profit margin only added 1%, as against 33.4 in 2019. Why in 2020 it was just 33.5. But in 2021, there's a lot of drop, in the profit margin. But then the revenue was also high. You cannot mistake this, because if you watch the cash flow, the free cash flow, there is a significant progress in the free cash flow. In 2020, in 2021, you can see the free cash flow is now $79.5 million, as against 2020. Yes, and this goes on to also show that this company is actually doing well. The free cash flow they still maintain the free cash flow in 2022, but then the profit margin actually dropped. In fact, it was a minus. It was a minus. But if you watch the revenue keep on moving. It means that there is more revenue. Probably the earning may have also dropped as a result of internal investment. They could have also invested in manpower or invested in new innovation. Yes, once that is done, because from the profit, from the revenue, if they invest more in any new innovation, it will also affect their annual earnings. Do you understand that? But on the free cash flow, it actually shows profitably, because this company has more to spend. Analyzing from the composite of the revenue, the earnings, and especially from the previous 2 years. Why in 2023 there is growth. There is the game was also changing, because you can see the revenue has actually increased more than that of 2023. I mean that of 2022. So you can see that from the profit margin is 4.9%. It's 4.9%, and the earnings is $18.6 million. So this will also come from the point of the previous investment in the company, in new innovation to bring new ideas, new product to be able to grow. So these are what you must always check before you continue to invest in any particular company. Know their past performance. If there is significant growth, it means that this company is actually up and doing. There is free cash flow. I love it when you see the free cash flow always, always moving forward, not just reducing. It means that this company has more to spend. You can see what is showing here, the free cash flow versus the earnings analysis. You can see how it is going, the earnings, the depreciation and amortization, the stock-based compensation, net working capital. Net working capital actually dropped, others, and free cash flow is actually growing. I love this. This company is doing awesome. So once you know all this, you'll be able to make your investing decision. I love this particular company. So please do me a favor, make sure that you subscribe to my YouTube channel, click the notification bell, because there's a lot that you need to be learning. Investment is not a one thing, it's not a one day thing where you say, oh, you know how you invested yesterday, today it has no issue. These are market. The market changes almost every seconds. Yes, I tell my mentees, I tell my investors, the market changes every moment. And that is why for every portfolio that I'm managing for my investors, there is always a change. They always see the activities there, selling some stock to buy a better one. When you see a new opportunity, you sell what you have before, you go for the new opportunities. We are actually, in the game of financial, game of money, what you put your money into is what will fetch you money, because that is what we call passive income. And stock helps you to build generational wealth. Yes, generational wealth that you can transfer. So what I do for you is to make sure that your money is invested wisely. And the best way it can be invested wisely is to get all this knowledge. So if you also want a one-on-one class with me, or you want me to manage your resources, your investment for you, don't hesitate. Just drop a comment on this video, or you send me a mail, or you drop me a WhatsApp message. I will always follow up. The bottom line is that whatever we're going to be doing, you will always see the result. These are what I do on daily basis for my investors, for my mentees, and they are making money, and I'm also making money, because there is always terms and conditions attached to it. So guys, in the next video, I want to delve into the 50 listed stocks that I've analyzed, and I will show you how I analyze them, how you can use them immediately, buy them, hold most of them. The ones that you need to also trade on daily basis, you can also trade on them, either spending 1 million naira or $1,000, $50,000, 25, many, as the case may be, even $5 you can also invest. So follow me and make sure that in the next video, in fact, you're not going to miss it, because everything I'm doing right now, you need to see the listed 50 stocks that you can buy at the moment. I've listed them from finance, tech, real estate, entertainment, from a whole lot of them. You have many of them that are into technology, many of them that are into health technology, manufacturing, and a lot of them. So see you in the next video.